Pretty quick tip. Hey, I want to go over a few things with you on a retail pricing because it's kind of unique. A lot of people thinking right now wholesale prices are going up. Tariff stuff is happening, obviously, so people are getting afraid. And this is I seen this happen prior to the pause on tariffs. Okay, so I want to show you some examples of vehicles where we're seeing retail prices going up. Just random three vehicles I was looking at in somebody's inventory. I did some meeting calls yesterday, and I met with my team too, messaging them to see if they've seen the same thing. And what I mean by that is we're going through dealers' inventory because we do weekly calls with our stores. We're calling out vehicles, trying to challenge them on redirecting inventory movements and pricing on a lot of them. And what we're pulling up is a lot of cars where yesterday we were priced at 95%, and today it turned into 97%. Or 2 or 3 days ago, we are at 93%. Now we're at 95%. So what that means is the market's dropping, or one of two things that could be happening. People are dropping their prices. Other dealers are dropping their prices. Now my 93 turned into 95, or the cheap stuff selling and getting flushed out. And now what's left is the more expensive stuff. And so as that cheap stuff leaves the market, right, then my price becomes higher. So that either way, what that's telling you is people are wanting cheaper vehicles. I did a video just a week or two ago about the market, and I don't believe how customers are going to be willing to pay higher dollars for used cars. So even though wholesale is going up and availability is tight, logistically, actually, there's just as many used cars listed on AutoTraderCars.com today as there was a year ago. But the problem is the shopper index and shopper activity is actually less. I've done other videos about that. If you need me to dig deeper, show you that proof, just let me know and I can do that for you, not on this video. And so with that being said, is I don't believe consumers are going to, because think about it, interest rates and negative equity, things like that, people aren't going to be able just to transition and just in comfort, discomfort with knowing where the economy is going and so forth. So I know inflation's down right now, but it's also people haven't recovered from that and just trying to get their feet back underneath them. So if you're happen to listen to this, I would encourage you to go to YouTube, Facebook, LinkedIn, whatever, go watch the video. I'm going to show you some aspects of what we mean and what we see when we're talking about we're seeing prices go up. All right, let me or actually, I'm sorry, not prices, that their price, dealers' price to market's going up when what that means is retail prices are going down. So let me do this. I'm going to go ahead and share my screen. I'm going to show you one aspect of, one of the things that we track in our lot walk tool is this right here, price to market difference from yesterday. So example, on this particular car here, priced at 13.5 at 103% of market, we're showing a difference of 3% since yesterday. So what that means is yesterday they were priced at 100% of market. Now they're at 103. Or this 101 at 22 grand. Yesterday that was at 99% of the market. Now that price to market's moved 2% to 101. And so what I mean by that, let's look at some vehicles here and how you see this. So here's a Jeep Cherokee, okay, for example. Now this happens to be a dealer with vAuto. If you have any other inventory management tool, you can look at historical in here and you could see on a 4.8, okay, 3 days ago, 25 grand was 94% of market. What is it now? It's 96% of market. The market has dropped 2%, okay? And so there's other vehicles in here too, like say this Buick Encore I was looking at. This car was priced at 92% on the 7th, and now that is 94%, and now it's at 93%, even though they're number one. Again, that means possibly cheaper cars have left. Here's the Sierra that you take a look at. Again, I was randomly picking some cars here, and right here, 29 grand, okay, was 89% of the market. Now it's 92%. So if I go back to 89% of market, that's $1,000 drop, 28 grand, because where they're at right now is 29 grand. Okay. So I'm not going to mess with this up. I'm not going to share that, but there's two areas that I just showed you, both in our data where we're tracking yesterday's price to market to today's price to market. Here's cars here that 2-3 days ago we're 1 to 3% more aggressively priced. Now we're not. So for any dealers out there that just think these tariffs and these higher dollar cars and we're going to raise our prices, think that consumers are going to be willing to go out there and pay that extra money for it, I think you're going to be misled, because typically April and May bring about anywhere from a 10 to 20% drop in shopper activities in most markets, meaning the tax season of February, March is gone. Spring's coming. It's going to be 70, 80 degrees here. I might end up going to the lake for the weekend, right? Because we've been cabin fever, right? Now we got a lot of things. I got a spring cleaning at the house, clean out my garage. I got mulch my yard. I got, there's a lot of things that people are going to be distracted of. If I got any tax return, that money's probably already gone. So you get this slowdown on activity with consumers, on top of the fact that, again, they don't have to buy anything unless their car got totaled or they have to replace something. They don't have to buy a car, and a lot of them are going to sit on it. And I mentioned a couple weeks ago, I think in a video, I was on one of the calls with a Subaru dealership. Like I said, it was a week and a half ago with the used car manager, and they were concerned because the dealer said they wanted to go for gross, not to blow out a bunch of age cars and lose it. They want to kind of slow down on pricing and stuff. And fine, if your sale rate stays the same and you can get away with that, but it wasn't. His sale rate was dropping off. That's why the used car manager was concerned, but the dealer is the dealer. But not only that, he said, you know what my dealer just did yesterday too? He went out and bought 100 used Subarus for the inventory too, because again of these tariffs. And I'm sitting there thinking, man, that's got to be one of the toughest decisions to make right now. Now, that could be a really paid off risk. But my thought on that was, I think the Subaru buyers are very analytical, they're not emotionally based buyers. And I think a lot of Subaru buyers, again, are going to maybe hold out on their cars and not transition out of them. They're not a lot of emotional buyers. If you happen to know the car market and Subaru's buyers, I don't think I don't think that was the market to go after, thinking that all these Subaru buyers are going to act emotional and be afraid of missing out and start buying a bunch of used Subarus because the new ones have tariffs on them now, right? So, they're going to adjust their budget first before they do anything like that. So anyways, just don't go out there and assume because wholesale's up and wholesale values are up that just because dealers are willing to pay more to fill their lot, because we can't sell on empty shelves, right? Doesn't mean the consumers are going to be there. So profit margin is going to get tighter. Okay. And so that's where, again, in order to make the most money on your used cars is increase your fresh sale rate, not hope and hold, hold out and hope that somebody's going to come in and overpay and get you out of a situation. The best opportunity is to get off a used car as soon as possible. And matter of fact, you want to make sure that you want to increase the amount of cars you sell fresh. Our goal is for our dealerships to sell 60 to 70% of their inventory in the first 30 days. Okay. And so if you can do that, you're going to increase that gross profit margins. So don't do the hope and hold. Don't overstock. Look at your last 2 weeks of sale rate. If you sold 50 cars in the last 2 weeks, that puts you on pace to sell 100. That's what you need to be carrying. Whatever you sold in the last 2 weeks, if you sold 50, make sure 50 units are in your 0 to 15 to give you that inventory carry rate. So we break this all down with our Lotwalk software and our weekly calls with our dealerships. If it's something you need help with to keep ahead of this changing market, everything we do also applies to new. We can do that with new car operations in case you're afraid of these tariffs and what kind of adjustments you need to make there. Reach out, lotwalk.com, do a demo. Hope this was helpful, and enjoy your spring weather that's breaking here for a lot of markets. And don't be surprised if you look around and used cars gets a little soft. Again, anybody looking at a vehicle right now is probably going to see what kind of deals they can get on new, especially with Ford. Congratulations to them attacking this aggressively, being the handshake deal, American deal. There's some manufacturers out there talking about the Honda store. They feel like they're second or third in line with the most productive U.S. build stuff. So we'll get around this. Again, 6 to 12 months, it becomes the norm. The next 3 to 6 months is just kind of getting our feet and the bearings underneath us to figure out what we need to do. Hope this was helpful. Have a great